The following is a presentation of TFNN, live at TFNN, the Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 10th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful. Folks, I mean grateful for your presence here today. Thanks so much for joining me. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that, well, just simply tools that empower human potential. Why? Because living up to our potential, that's something you and I, we must master each and every day. So let's begin our day with a few empowering beliefs. The first one brought to us by William Feather. He went on to say, and I believe this to be true, the happiest people are those that are too busy to notice that they are not. Put that feather in your cap, folks. How about this one here? That was, of course, by William Feather. I thought that was a pretty good play on words there. Let's take a look here at Arthur Rubinstein. I don't have one for a little feather in your cap on this one, but he went on to say, I must accept life unconditionally. No question about that. He went on to say, most people ask for happiness on condition. Happiness can only be felt if you don't set any condition. No question about that. How about this one from Albert Hubbard? He went on to say that the happiness of this life depends less on what befalls you than the way in which you take it. There is no question about that, folks. You know, cheerfulness, that'll open up the door when other keys fail to open up the doors you're trying to open. Remember, the real question for each of us is not what would we do if we had the means or the time or the influence and the educational advantages. The question is, what is it that we're going to do right here, right now? Why? Because you have an amazing power within yourself. Let's go check out the amazing power of these markets here. Right now, we've got the Dow trading out at 15,153, up 90 points, up 0.6%. S&P up 0.6% as well. It's up $9.83, trading out at 1681 and change. The composite here, interestingly enough, the composite is dragging. It's only up 0.5% or slightly underneath that. It's up 17 points at 37.23. Russell 2000 up nearly 6 points at 10.51. Apple's back $3. I don't know if they have yet. They're coming out with an iPhone announcement if they haven't just yet. You've got Microsoft up big. Microsoft up 51 cents right now. That's up 1.6%. Google up 87 cents. Cisco up a quarter. Intel off 7. Leading the charge to the upside, Priceline, PCLN up 11%. I'm sorry, up 1%, up $11 this morning. Netflix having another nice showing here, up $9.40, up 3%. Tower Financial, TOFC, up 46%. What is behind that move out here? Old National to acquire Tower Financial. Well, that's what makes sense there. 5 below, well, it's 5 above. It's $5.77 to the upside, up 14%. MasterCard up about $6. Probably trading off the news that Visa is going to be added on September 23rd into the Dow 30 stocks, going ahead and replacing, I don't know if Visa's replacing Hewlett-Packard or Bank of, it's probably replacing Hewlett-Packard. You've got Bank of America falling out, you've got HP falling out, and you've got Alcoa. It's about time, right? So now the question is, who is going to kick off earnings season this go-round here? Well, it's not going to be Alcoa, so it is about time that they got out of the Dow. Moving into the Dow, you've got holy Nike schmikeys out there. NKE is a ticker symbol, Goldman Sachs, and Visa. Also the upside today, Tesla Motors, it's up $4 and change. Lumber Liquidators, LL, up $3.47. To the downside, you've got PVH Corp up $6.53. Model N off 5. That's off 32%. Let's take a look at that stock chart during this show. Remind me if I don't remember to do that. You've got Neurocrine Bioscience. Might have got that one right. NBIX is a ticker symbol. They're off a whopping 30% here this morning. Urban Outfitters taking it in the shorts out there, down about 11% off 450. Our call number 877-927-6648. Let's start off by taking a look at the S&P 500. It's trading up at the top of its range today, which is at 1681.57. Where does that take it? Well, it's inside the gap here, and it's going to go ahead and close that gap. The low of the gap on August 14th is 1684.83. So far, intraday, it's been up to 1682.26, so expect that gap here to be filled. If it can fill that gap, the next area that it could move up to is the 0.618 retracement. That would be 1692. So your range here on the S&P 500 today, 1684 to 1692 as a likely target. What can we see on this chart here? Inside the S&P 500, number one, we can take a look at the rising price channel coming off of the November 16th, 2012 lows. Price had broken out of that and broke out with some conviction on August 27th. And today, it is officially broken back inside that price channel, signaling a potential false break to the downside out here. What else can we take a look at on this chart? Well, what we should do, let me try to do it this way so I don't mess up this chart here. Let's go take a look at the S&P. Well, I don't want number sign. I want the dollar sign, SPX. And let's go see. There we go. Okay, so that'll work. Let's go take a look at the S&P 500. Let's go hunting for bear, because we got to go looking for bear. We need to find out where they're hanging out. Now, these other things that are on this, these might be one-day rate of changes, or, well, let me see what they actually are. I should open it up and see, because I'm going to erase them here in a moment. Good question. I don't recall what they are, so I'm going to go ahead and get rid of all of those things on there. Delete them all. There we go. Okay. So now we're going to take a look at the S&P 500. We want to do is go start drawing our lines for where we should see natural forms of support and or resistance. Right now we're going to be looking for resistance lines. Well, you got this key reversal bearish engulfing session all the way back here from May 22nd. Remember, May 22nd being a key day? Well, it looks like the S&P 500 is going to go ahead and try and tackle that again. We'll go ahead and we'll use red. Let's use red lines for our resistance. That way, we'll use black lines for our support area out there. So if we take a look at that, that's an area of resistance, 1687. If we take a look at other areas, you see this little bearish engulfing right here. If you don't, let me point it out to you. It is on the trading session of July 23rd. That was the high. We're going to make another red line going across our screen out here. We have a series of bear sash candles. You've got one right here from August the 9th. You've got another one from August the 14th. They're within inside this little square that we've got out here, so we're going to identify, we're just going to leave those alone with regard to patterns out here. You also had, this was a little morning star pattern, this 3-candle session right here. This red down thrusting candle on August the 9th, this little spinning top-ish type candle on August the 12th, and then this candle right here actually created a morning star. This was the August 13th level. So as we draw a line, this was a line of support out here. Remember, old support can become new resistance. So we're going to draw that right across the bottom there. Now, if we take a look at that, that low is 1682.62. If we take a look at the high today, 1682.26. So we have not gotten inside that just yet, but that could be a natural area. So when it comes to the areas of resistance out here, remember, the reason why we want to have identify where our old support lines is because support can become resistance. So here is the resistance that you see with inside the S&P 500. What does that mean to me? Well, what it means to me is this. If you get above the level of 1698.78, I think it was Alex or somebody in the den yesterday was asking me about breakouts and inside the S&P 500, and I think I pretty much bumbled. Don't know why, but if I didn't confuse you, I sure as heck confused myself out there. So no confusion today. So we're drawing these lines of support and resistance, and here it is. You get above the level of 1698.78. That's that last bearish engulfing that we had out there. To me, that would be considered to be a breakout. Now, look, it still wouldn't be above the area of the most recent swing point high of August 2nd out there. But folks, this is not this pattern right here is not a reversal pattern at all. Not even if I stitch these things really together could I really create a significant reversal. So this becomes the area of real significant resistance in my book, and that is going to be that high of 1698.78. That is on the S&P 500. If we go take a look at the SPY itself, we'll switch over to the SPY, see what the SPY is doing here right now. That is gapped up this morning, so we've got a gap up into the gap down, right? So that's a gap down from August 14th. That was 79 million shares. Of course, it's really going against 152 million shares. Yesterday, it was up and over the gap, right? So that's this black line going across my screen. We'll go ahead and, in fact, if you're just listening on the radio, your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can catch a live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you can click on the button upper right-hand side. You'll see 3 little smartphones. This show will stream live. And welcome to all the folks that are inside the Tiger's Den. Everybody that is playing along with us in our $10,000 TFNN virtual trading competition out there. And congratulations to our leaders out here. In fact, our leaders in the clubhouse through yesterday's trading. We had, I don't know if it's a woman or man. I just have the initial. So we want to go and congratulate, where is it? It's right at my fingertips out here. It is, come on, there we go. N. Gill made $12,900 yesterday in his trades using the TFNN virtual trading competition. In second place is David Phillips. He's about $5,000 behind, but I know he's out there today. He's focused. He's taking massive action. I'd like you to take massive action as well. Make sure that you go place a trade because it qualifies you for none other than at least, it doesn't have to be a winning trade, at least one of our 5 randomly drawn winners for you to pocket $100 today, just simply by placing a trade. So get out there and place that trade. If we go back here to the SPYs, we can see, let's go draw these areas now. This is up and over, so you had price close inside the gap. When you close inside the gap, what is it likely to do? It's likely to go fill the gap. Now let's go draw the line for filling the gap, because that certainly is the second area of resistance. When you see a gap, whether it's in this case here was a gap down. So what we want to do, let's go here. Let's put this as a black line. No, I said we'd use red lines for resistance, right? So I want to make this, that was a, what the heck did I do there? Oh, I put it to a 1-minute chart. We're not going to go look at a 1-minute chart. We're on the daily out here. Oh, so much for that. There we go. Okay. So I'm going to switch this to a red line, not to be confused with the red lines that are government officials kind of use out here. We're just using support and resistance line. Let's go ahead and get rid of this here. So now we've got our resistance line set up here. We can also come back, just as we took a look at on the S&P 500, you've got this bearish engulfing key reversal session as well. That is going to be resistance level. So we can see where we've got resistance overhead inside of the S&P 500. Well, there's a little bearish engulfing right back here as well. So just like we took a look at on the S&P 500, you want to understand what the S&P 500 is doing, the SPYs, I should say, in this case, as it approaches its resistance lines. Each of these are lines of resistance. Now you're up over this one. This was that gap down from August the 15th. Again, volume there, 152 million up yesterday with 87 million shares. If you close inside that level, meaning the August 14th low, which is 168.70, the question is going to be, is it just going to run into that May 22nd high of 169.07? And if it can close above that, then its next area of resistance is going to be that bearish engulfing candle that was established on July 23rd out at the 169.83. And then, if in fact you get a close above 169.83, and that's before it gets to the swing point high. Guess what, folks? That, in my book, that would be a breakout up there. Of course, you'd like to see it coming into that level with more than 54 million shares out there. That's the swing point high. That would be a great indication that the market was, in fact, getting ready to break out. Of course, we'll come back. We'll take a look at the Dow. We'll take a look at the diamonds. We'll take a look at the Russell 2000. And, of course, what you want to be watching today is none other than Basil's VIXI. The VIX index out here right now, that's trading out at 1496, but it gets below 1483, folks. It'll be below the 50-day exponential moving average. And then you'll have all signs are go, quite frankly, to the bullish side of the market. 877-927-6648. I'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. That Dow's up 96 points right now. S&P is up by 10. And, if we take a look here at the NASDAQ futures, the daily contract here, someone might say, well, Steve, why, what's the bearish case? What is it that you're looking at? Because I like to look at both sides of the trade. In fact, no matter what trade you're in, if I could pass this along to you, one of the best things that you could do is just simply step back each day and take a refreshed look at the chart. And take a refreshed look at the chart and identify both the bullish case and bearish case in every side of the trade. And you need to do that just simply from your old money management as far as managing the trade, where you should be placing stops and so forth. And What it will help you to do, it will help you to do what I consider to be the most important thing, which is trade what you see, right? Trade what you see on the charts. Just turn off everything else. That means turn me off. That means turn everybody off and go take a look at the charts and utilize the tools that you do have in your possession. Now, always add to that toolbox. Yeah, I can tell you that Basil does it, David White does it, Larry Pesavento does it, Tom does it, Andy Heck does it, Steve Rhodes does it. You do it as well. You should be doing that. Is always be looking for some additional tools, but trade what it is that you know, because there are so many tools out here. It's just tools to be learned. Now, if we take a look at one of the tools inside the NASDAQ futures, it's just simply price channels. And one of the things that has me just a tad concerned here. Now, here's where we're going to take a look at both horizontal and diagonal resistance. And what concerns me just a tad right now is the diagonal resistance. The diagonal resistance is this price channel that price has been traveling in off of the November 16th lows out here. And you can see the highs that I've marked have contained price. If we go back into the May 17th, 20th, 22nd level out here inside this price channel, you can see that contained price. As price moved up here in August, in the middle of August, August 6th, August 5th out here, that contained price. Even another run up on August 13th inside the NASDAQ futures. And what we've seen here this morning and today, we've seen a tag of that area. So the question is going to be, is price going to just simply start moving sideways to build up some energy? Now, look, if price breaks above this price channel, that in itself, then that wouldn't be a bullish break because price is already rising out there. In order to be a break of a channel, it's got to go in the opposite direction, right? Absolutely. So what we can also take a look at, though, as we take a look at this chart here, now everything is set up, moving average-wise, everything is set up to the bullish side. It has been. It's been set up to the bullish side ever since July 8th, 2013. And this market does not go down without the NDX, without the composite participating to the downside. It just is not going to happen out here. Now, if we take a look at the horizontal support and or resistance, in this case here, we now are going to be taking a look at support. Old resistance, in fact, that now is going to act as support. And we're going to start off by taking a look at this evening star candle formation. And that's out here at the most recent highs back here on August the 5th. So you've got the candle session of August 2nd, 5th, and the 7th out here, the 6th, I should say. So we're going to use, because this is support now, we're going to go ahead and use a support. It's going to be a black line. That's right. So we're just going to try to get consistent out here. I better go ahead and change this one to a black line as well. So now that is your area of support. What else do we have out here as far as reversal candles? Well, you got a bearish engulfing right here. That was at the session of August 14th. So we could put a little black line across the top of the session that in engulf. That would be the 13th out here. That price point for you on the NASDAQ futures was at 31.48. You can see that we are up and above that. We also had a little evening star candle formation right here. Take a look at this 3-day pattern. This is the session from August 26th. The high here on August the 26th as well as August 27th. So it's the high of August 26th, which is at 31.47. That becomes now support. Was resistance. You're up and over it. You got up and over it yesterday. Of course, you're running now into some diagonal. So support inside the NASDAQ futures. We'll give it the. We'll go ahead and give it the lower end, which is going to be your candle session from August 6th at 31.39.50. If price pulls back and tests that area, and that's really what I'm taking a look at the market actually doing. You want to take a look at strength and weakness, right? We take a look at strength here. What the market ought to do based on this price channel is it ought to go ahead and start pulling back. And what you want to do, well, depending on what hours of the day it is that you're trading, what it is that you want to see, you'd like to see it come back, test this area, act as a support to tell us that, boy, we've got a real breakout above. Now, it is a breakout. It's a breakout as we speak today. Unequivocally a breakout. What you like to see is a market that would now pull back just simply because of that rising price channel that is out there, and that's inside the NASDAQ futures. We can probably draw the same kind of price channel if we go take a look at the daily composite. Let's go see if, in fact, I can go ahead and do that again. We're going to come off of the November 16th low out here. Let's see if we can, what that would look like here. So we're going to come all the way back here to November the 16th. We're going to come back. We're going to use the, well, you know what? I'm going to wait to do this until we come back from the break. Right now, we've got the Dow is up 107. S&P is up 11. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, Now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow up 111 right now. S&P up $11 as well. New York Stock Exchange, that's up $64. That's up 0.7%. Quite frankly, it's almost leading the charge. It is just behind the Dow, which is up 0.7% as well. We've got net advancing issues today of 1,082. So a little bit weak here. It's really about a 3-to-1. Well, I guess not too bad. No, 2-to-1. It's really a 2-to-1 ratio that we've got out here. So not as strong of a market breadth day that we had here yesterday. In any event, we're going to go back. We're going to take a look at the NASDAQ Composite Index. And we're going to do the same thing, really similar to what we were doing on the futures. We're going to go ahead and draw the channel lines in here. Now, when we're drawing the channel lines, we're using either an open or a closed candle. Doesn't matter which one. You're trying to identify the most number. You want to have at least 3 contacts out here. So we're going to go ahead and we're going to use the open of November 16th. And really, this is, a channel with inside a larger channel that's out there. The larger channel obviously coming off of the March 09 area. So this is what I'm using as my channel lines. You see me drawing them in here. And what we're going to take a look at, we're coming off of, so I'm using the open here on the composite November 19th that opened 28.86. I'm going to use, which happens to be the close and then open of the following session, which is on April the 18th and April the 19th out there. You can see as price had moved down back in June 24th, that contained price with inside here. We can see to the upside. I'm using the area that really is pretty much the close of probably May 21st, May 20th out there. That seemed to contain price here as price. Now, we did see a slight move above that area. Again, that's not a breakout because price was already moving higher. Came back inside the price channel and then went ahead and moved lower. Of course, not much lower. This is coming into the August 27th lows out there because it didn't even make it down to that gap up from July 11th. Now, so that is now what we can see here on the actual daily composite versus the NQ. We can see that price is close to the level of the top of the rising price channel. Now, what we can also, and this is something if you've been listening for days, ever since that island reversal pattern formed here, which was over the sessions of August 23rd and 26th, and it was the prior session of that, which is August 21st, where we had that first gap up. And then we had a gap down that took place on August 27th. And I said that that's going to be really important for us to be paying attention to because that is the most bearish of all reversal candle patterns out there. Not candle patterns. That's the most bearish of island top. And when that gets taken out, it tells you a strong trend is really underway. And I'm going to go ahead and erase this now because that's exactly what took place yesterday. It, in fact, took that out. It took it out with some conviction as well. Now let's go find the areas of support, because we're up over the resistance. So we're really going to identify where the resistance, and what you've got here inside the composite, instead of bearish engulfing candles, you've got bear sash candles. That was on August 6th. You see one. You see another one here on August the 14th, and then you had a gap down, so that's another bearish signal out there. So that sets up for us our area now, which should have been resistance, and now that becomes support. So that's going to be a black line that we're going to draw across the screen. Now, you got to be willing to move this up and down just a tad. I'm going to be a little bit more conservative. And what we're going to call support inside the composite is a price level of 36.91. So if price comes back, revisits around the 36.91.06 level, and folks, it can be something different there. Remember, you want to be able to move the line up and down. We're just not talking about, $50 difference. We're only talking about a few dollar difference or so. As long as that area gets tested and holds, that becomes a strong area of support. And that becomes a better level of support, quite frankly, than even the overhead resistance of diagonal, because the price is already moving up here. So that is on the composite. If we go in and we take a look at the Qs, let's go see what the Qs are doing here right now. The Qs that's the SPY. Let's go take a look at the Qs here, see what we have to redraw on this chart, if anything. The Qs now priced at 78.22. They took out that little evening star area. That evening star was this three candle session right here, which was August 5th. August the 2nd, so August 2nd was weekend, August 2nd, 5th, and 6th out here. So price is above that. We got above that yesterday. Volume yesterday, 25 million shares, as it was taking out 27 million shares from August 26th. So that becomes our area now of support to be tested. And that is going to be the evening star candle that was formed on August the 5th. The high out there is $77.08. That's what you want to go ahead and put down on your pad of paper out there. Let's go take a look, as long as we're in the ETFs, let's go take a look at the week link out here. Then we'll take a look, which is the diamonds. Then we'll go take a look at the IWM, see what it is doing. Now, the diamonds here have now broken that little sub-correction price channel that price was traveling in, or a new descending price channel. And it broke through it yesterday. It's gapped above that area today. What is it doing? It is a weak link out here. It has at least now made the .382 retracement. What are the diamonds likely to do? Well, we'll go take a look at IBM and a few other stocks here, but the diamonds should at least go test the August 15th high. That's at 152.10. If you can get above 152.10, that'll go ahead and set up a 0.618 retracement, get up to the 152.85, but more likely close the gap at 153.11 before it provides its next signal. Volume yesterday, a little bit weak on that move up, only 4.4 million shares. Today so far, much stronger. 2.2 million shares in the first hour-ish of trading. So what does that give us? Straight line math, probably about 6 million shares or so. Not enough to take on that 10 million supply line, which was on August the 5th, but still it's moving up with some accelerated volume if, in fact, this pace were to continue with itself, and that is on the Dow Diamonds. Let's go take a look at the ETF structure for the small caps, the IWM. The IWM now up and above the 0.786 retracement. The IWM is going to go test its August 5th swing point high. That level, 105.63, the low is 104.90. Has not made it there yet. So far, intraday, it's been up to 104.79. Now, 8.5 million shares is what it's done so far, coming into a swing point that's got only 15 million shares. Something to think about. So it's coming into the swing point with volume. The gap down inside the IWM, which took place on August 15th, that one had 50 million shares, and the gap down on August 27th, so it had lighter volume, 47 million shares. That was a dangerous thing because it had lighter volume as it was coming into this little support line. Now, what was interesting is you had 43 million shares actually kind of broke a beat, but not kind of, it did, broke a beat point on August the 30th, but it has rejected that area. Volume up yesterday, though, 27 million shares. So that 27 going against 47, well, not exactly enthusiastic, but today it has done nearly 8.5 million shares. Straight lined today, that would give you about a 50 million share day. That's only going into 15 million shares on August the 5th out there. So it looks like the IWM, if it can get above the level of 105.63, you would have a real breakout in the works. If we do take a look at the IWM, try to find where the bulls and bears are hanging out inside this equity, really what you've got is you've got this bearish engulfing candle. That is a session here from July 23rd. See that little doji that you had out there, high wave candle really? That's a bearish candle signal. And then you had right here, you had the bear sash from August the 6th. So real resistance on this ends up being the high of 105.63. That's that swing point of August 5th. So if that could be taken out, guess what? That sets up an A to B equals CD pattern here. Your A point, in this case, would be your June 24th low out at 93.83. So we want to be paying attention to the Russell 2000, to the IWM. Now, let's go take a look at a couple of these stocks here that have been popping and dropping. I said I wanted to look at some of these ones here that are dropping that are really weak today. I think the first one we wanted to look at was, I just want to make sure I'm not picking up something that had a, so let's take a look at this bioscience company, Neurocrene Bioscience. I think they might be out with a bad, maybe the, let's see here, see if I can find out what is actually driving this. Try to punch up the news on this. So announced after the bell Monday that the 50 milligram dose of NBI did not meet the primary endpoint in the Phase 2 Connect study, while the 100 milligram dose showed statistically a clinically significant improvement. In any event, this stock here is gapping down. Let's go see if it's moving down in any kind of volume. Again, the ticker symbol, I didn't even give it to you on this, is NBIX. N as in Nancy, B as in boy, I as in individual, and X as in xylophone, right? But that doesn't even sound like X when we say xylophone, does it? In any event here, my goodness, gapping down with big volume. So that's certainly volume off the top. 4.6 million shares out here. Closed yesterday at the price level of 16.70, trading out 11.76. So that's a big haircut. Let's go pull this back. So it looks like at some point in time I looked at this for someone out here. This thing here, volume-wise, this got big volume. Last time that this thing had any kind of volume like this was all the way back in May of 2010, out at a price level of about $4 or so. And then the volume day before that would take you down into March 27th around 852. Hope none of our listeners out there are inside this equity. NBIX is the ticker symbol. Let's take a look here at Model N, or is that a buyout here? No. MODN. is the ticker symbol. They're down 32% this morning. Man, talk about a kibosh. MODN. Let's go see what this is trading into. NODN down with volume today. Big volume today to the downside. So this looks like this is an IPO. This is disastrous. Take a look at this. Debuted March 20th. Went from a price level of $19.90 to $22.25. Made a high out here as recently as July 30th. Makes a high of $24.78 with 58,000 shares. Down today with 1.6 million shares in only an hour and 15 minutes of trading. So not that many shareholders in MODN. Let's go see what the heck do they actually do. They are provide revenue management solutions for the life science and technology industry, develops applications such as managed care and government pricing for life science companies out here. Well, it does not have a whole lot of life in it right now, trading out at $10.04 out there. Let's take a look at Urban Outfitters. That, too, is to the downside this morning. URBN is the ticker symbol. Let me see if they were out with any numbers or what's behind this move here. I don't see anything behind the move other than big volume to the downside. So let's take a look at Urban Outfitters. It's moving into a oversold condition, but taking on its most recent swing point from June 24, 3.2 million shares there. Already done 7 million or 6 million shares here today. So getting ready to take that out. Urban Outfitters has really been traveling in a sideways consolidation now. It has not come back to test the original breakout level, which has big volume, which is on August the 21st, 21 million shares to the upside. So it could get down and test that level, which would be right around $31.80. But it has only traveled with inside the gap that it created on that trading session from August 21st, between the 21st and the 20th out there. So as far as trying to identify good lines of support inside Urban Outfitters, I would just simply come all the way back to the breakout here. Let's take a look at Netflix. Let's go see what Netflix, because they are up $12 here. NFL. Oh, I didn't want to do that. Let me go over to show up here. And I can come back and I can clean that up. So let's take a look at Netflix. NFLX. So that is up a nice $12 right now. See if there's any news behind its move out here. No news that I see, but Netflix trading out at $306. Looks like Netflix, let me take this back here. How about this? Netflix is up. Is it over its highs? Son of a gun. It is taking on its swing point high. Talk about a wild ride inside of Netflix, folks. Netflix, July 13th, got up to a high of 304.79. It's trading at 306 right now. Went from 304.79 all the way down to a price low of $53.13. And that's what taught me a new tool that I use for to actually bottom fish out there and identify when a stock, such as Netflix, Hewlett-Packard, there are a number of them that I have used this on, all the gold stocks that we traded here in the month of August out there, where I think all summed together produced about 129% profit of the trades that we opened in August and closed in August out there, and utilized one of these techniques here. But it drove me crazy. So how is it that I can find a way to a different trading strategy, a different trading pattern than what I use out there? Because as I said earlier, you want to make sure that you're always adding new strategies to your system to try to understand and interpret the market. Well, in this case here, it went from $53. I missed out on this trade altogether, but the next time around, I most certainly won't, or on a stock that looks like this. Well, this thing has made that 100% move of a move. We'll see if it's going to get tired at all. Up there at 304.79, there were 7 million shares. Well, so far today, folks, this thing has done 2 million shares, so it's got volume behind its move out here, and that is on Netflix. But let's put this on a longer-term chart. Now, let's put this on the longest. NFLX, again, is the ticker symbol. And we're going to go ahead and put this on a monthly chart, see if we can see on the monthly chart if this is up over a resistance level as we come back and we take a look at this swing point here on the monthly from July 31st. And, of course, it had a bearish engulfing candle. Now, on this entire move up off of the bottom here, we're taking a look at a monthly chart. Do you see any bearish candles? Yes, you do. You see one bearish candle. That took place right here on June 30th, 2013. And the very following month, that thing got wiped out, got taken out. And so it would have suggested on the monthly chart that it would want to go up and test that 304.79. Now it's trying to break above that. And if it does close above 304.79, old resistance inside Netflix, believe it or not, will in fact become new support out there. If we take a look at the weekly chart, let's go see what kind of candle formation we've got in Netflix on the weekly chart. And up here at the highs, the most recent highs back here in July of 2012, really that's not the actual resistance here on the weekly chart would be right here from June the 10th. And that level was at 277.70. Dow is up 114 points. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 116 right now. The S&P is up 12. And again, a reminder for everybody out there that is participating in our $10,000 virtual trading competition, get out there. Go ahead and place your trade so that you qualify for the 5 randomly drawn winners today. Doesn't matter whether it's a winning or a losing trade. You can put $100 in your pocket. Takes you all of about 15 or 20 seconds to go ahead and place that trade out there. And congratulations to everybody that is participating in that contest with us. Now, I'm going to go back to Netflix here real quickly, and we're going to take a look here at the, again, here's the cool thing about candlestick charting is that the bulls and bears, they cannot hide themselves, and they provide us with information about important areas of support and resistance. Inside Netflix, we took a look at the weekly chart. We saw an area of support that, quite frankly, took us all the way back to the trading session of June 10th, not up here at the highs out here, because these were not reversal patterns on the weekly chart. And it's important to understand which candles are reversals, which ones are not. I'm going to be teaching some of that as well during a Master Trader program that I believe we're going to schedule for September 27th out there. So soon we'll have the details on the homepage of TFNN.com, and you'll want to make sure that you're using these tools. If we come back here into Netflix, if we take a look at the dark cloud cover candle that had formed back here on February 22nd, 2013, that set up a resistance level at 197.62. It held as resistance. In fact, as price moved up there on March 29th, it got up to 197.06, and then, ba-boom, got a nice little bearish engulfing candle that took place here, and as soon as price closed above it, and it did that during the week of April 26th. That area should act as a support level. Of course, price never got down there, but once you get a breakout above an old area of resistance, it tells you that it wants to go up into the next level. And by having taken a look at this little move down here off of its highs originally back here at the level of 304.79, if you just simply went from the high down to the low that was put in here, happened to form a hammer candle, by the way, at that low, small hammer, nonetheless, still a hammer on September the 7th out at $53.13. As price was careening through this, guess what? It got above the 0.618 level, and it went to where? That's right, went to 0.786. That was at the 250 level. Now it's made that 100% move of a move, but really it is up over a resistance level. This should find support if it does pull back in the 277.70 levels, trade out at 306.84. Now, for the day, what are we going to be paying attention to? Folks, I think it really boils down to really one primary chart out there, and that is going to be the VIX index. That's going to be Basil's VIXie out here. And what the VIX index is doing right now, it has busted through. Well, I won't say busted through. We'll call it has lightly pierced the 50-day exponential moving average. It's trading at 1478. The exponential moving average, it's around 1482, 1483. But once price gets below that, folks, what we have seen in the markets is a move higher. So long as price stays below the 50-day exponential moving average, just come back here. In fact, if you're watching my chart, the upper portion of the chart, that's the VIX index. The lower portion of the chart is the S&P 500, which it's measuring. Now, if we take a look at that, you can see that you don't necessarily have to catch the first part of the move here where the market's making its reversal, where there's maybe uncertainty, and we've had plenty of uncertainty in the marketplace out here. And what we can take a look at is take a look at the move once the VIX, which I'm taking a look at the last move. So if you didn't catch the June 24th area, as soon as the VIX went ahead and closed below the exponential moving average, the 50-day, that was on July 5th, that was another nice leg up in the marketplace. And I suspect that's what we will see unfold as well, so long as the VIX stays below that 50-day exponential moving average. Stay tuned, folks. Basil Chapman is up next. He'll have plenty to add as well. Let's see. It is Terrific Tuesday. That means we've got the options hour from 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. Andy Heck as the warm-up band for the Tom O'Brien Show. And then listen to Tom from 4 to 6, because he's going to be announcing some of our winners in that $500 105 people are going to win $100 today. I hope that's one of you that are listening right now. Take care, folks. Have a great Tuesday. Look forward to seeing you tomorrow.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed down a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.